Good morning, everyone. Welcome to Nadex Morning Analysis, where we take a look at some hot spots in the markets that you might want to be looking at today. My name is Todd Rich. I am with Nadex. With me, my good friend Brian Caprice from Keep Trading Simple. Before Brian and I jump into it, let me share this disclaimer quickly that trading involves risk and may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk, and that this is an educational session. Please do not construe anything Brian or I are saying as buy or sell recommendations. We are doing this for your education purposes. So first up, I want to apologize for yesterday. I had to cancel it the night before. It happens. So hopefully you made up for it on Brian's session. He did an hour-long weekly recap, so hopefully you were able to catch that. All right, as for today, what's going on right now? ADP put out their unemployment numbers this morning. The economy is not recovering as quickly as we'd like to see it. We saw some moves immediately. Economy not recovering as quickly, no inflation. Gold got hit immediately. So we're going to actually take a look at gold in a bit, but we've also got ISM services at 10 a.m. this morning, and then at 10:30, crude oil inventory. Something could definitely move the markets. So we'll definitely take a look at oil as well, because there's an event. Whenever there's an economic number being released, it's someplace to look for potential volatility. So we'll go through that. Just as a reminder, it's an interesting week. We still have a lot of big news tomorrow and Friday. OPEC Plus meeting tomorrow. Fed Chairman Powell speaking tomorrow. So two things that definitely can move the markets. And then on Friday, it's the first Friday of the month, the U.S. non-farm payrolls and the U.S. unemployment rate. So end of this week, we're going to be seeing some volatility. And then the last little thing I want to mention is overnight, and we'll see this play out in some of the things we look at today with all the numbers, with what's going on in the European session. We actually saw dollar strength come back into the market. So in the EU session, dollar strength, and that kind of comes in when we start talking about gold and some of these currency pairs as well. So there's the quick little recap. Brian, let's jump. Let me flip this over. I should have done this earlier. Let's jump in and let's talk a little bit about what's going on in gold, and then we'll cover oil.
Sure. Also, again, I'm just going to put this pitch in there. I don't trade them often, but I want to make sure that everybody knows they're out there. You guys know I love news releases, but remember that Nadex does have the events as well. And I was just looking at it as Todd was mentioning it, but there's jobless claims, non-farm payroll, and employment rate all next 3 days as far as those. So again, this is kind of one of those things. Look at this and say, not recovering as good. Could there be potentially some over on the events? Absolutely sure. Yeah, as Todd said, so we had ADP non-farm employment change today. It was still a positive number, which is good. We're not losing jobs. But the forecast was coming in that we were going to gain 200,000, and we only came in at 117. Now, there was an upward adjustment from last time up to 195,000. So recovery is there. It may not be as fast as what some of the forecasts showed, but again, what this means is, again, we're not hiring back as fast as we originally had thought, and that goes back into the inflation story and it's directly hit into gold. Interesting setup today. With this 815 number now, we're seeing an immediate response. Not so much in the currency realm. In the currencies across the board in 20, you're not seeing crazy movement. For any of you that attended this session yesterday, hopefully you guys were able to jump on those two Aussie shorts. Both of them literally hit to the T and then drop right back down again. So Aussie is in play today as well. I'm particularly interested, and you guys can see this little highlighter here. This 10 o'clock ISM services PMI, you don't have to know what it is, as I mentioned before. You just have to know that this is a media news release. Seeing that we have this negativity here, right, with the employment change, the open should provide a bit of a catalyst. A lot of times when we see early morning news, this clock, again, it could be, there's a number of different 10 o'clock releases. This could potentially provide a reversal today in all the industry, right at that 10 to 10:30-ish window, as we're basically retracing the initial open reaction to the non-farm news, if that makes sense. And then right after that, bam, we have crude oil inventories coming in at 10:30. Again, crude oil is going to be an interesting one today as well. Particularly, I don't know if you guys know this, we have some new sanctions out there against Russia. And again, there's some bantering back and forth about, Russia saying that calls on the U.S. to stop playing with fire. Again, oil. Russia is more of kind of the natural gas than oil, but it may, again, they are part of that kind of OPEC plus discussion. So I wouldn't necessarily be surprised if that pops up again tomorrow in some type of energy releases. But do you want me to jump over into gold, Todd?
Yeah, let's do gold real quickly, just
All right.
because it's getting hit this
Sure.
morning.
Yeah. So here's where our gold trade is, and we've been talking about this for a while. It'll be hourly, and you guys, we were tracking this from back over here. We had some of the other releases. Actually, we just pulled it off. And this is kind of how we've been tracking. So right now we're sitting here. Yesterday for our session, we were sitting here, right? And we talked about this level. We just bounced off of it. Some sellers in here, and all we've seen is really oil kind of push back to the downside. Now I'm gonna drop to 30 minutes so you guys can get a real good glare on this one, right? So we know that we have area buyers at 1713, right? It got front run here, came in, we stabilized, and actually in this area, I'll draw it for you guys, but there's a nice little kind of push here. We see the ascending kind of bottom here where we had buyers stand. They made an attempt to come back down again, and then boom, got higher. Now we've had that emotional move, and really since, make sure this is correct, yeah, 8:30. This has been the European session from here, where I am right now, down. All right. In recent weeks, we've seen kind of the same scenario play out, where we've had a lot of movement in the European session, preparing for kind of a reversal or kind of how to play it in going into oil. So it's interesting that we drove back down into a level, and then right when US based traders are coming online is where we're seeing kind of it hitting that zone. So, it's definitely a potential long area. It's not the first time at this level. It's hit it before. We did have a nice little kind of confirmation bounce. And in fact, if you wanted to kind of shrink this a little bit and kind of lower our risk on there, depending on, not just what you're using, but, you could kind of draw this one in here and say, all right, well, this is a level. It's kind of been tested deep. The real question that I have is, could there be enough negativity in gold that we start pushing that 1700 level? 18 was 17 would be a little bit harder, but right now, I would say the way that this, gold is really kind of pushed down in the overnight, in preparation for kind of that bad news. I wouldn't be if we take some type of a morning kind of reactionary bounce higher. And again, ISM services could number at 10 o'clock that does that if it doesn't already happen sooner.
All right, I'm going to take a look quickly over at the Nadex platform, and I'm on the knockouts. Let's just throw some knockouts up here. And by the way, if we just take a step back and we take a look at, there, I think I've got it all on here. I'm trying to. You can clearly see that gold is in a downtrend. There's no question we're seeing gold get hit. Obviously, when we couldn't get through the 1800 level, now we're all the way down at 1700. I did drop on the 30-minute chart. I put in the Fibonacci retracements on here. The only reason I did that is I wanted this, this 23.6 level. I'm now going to zoom in on the just the recent chart on what we've been seeing here. It'll make it a little easier to see. The 1700 level, obviously, it looks like, kind of like those double zero numbers. They become a little bit of an emotional level, and see people stepping in to buy. We're actually seeing it a little bit right now as we get down here, that it's trying to take a bounce. If you wanted to do something down here in a limited risk, limited reward way, if it got down towards 1700 looking for a bounce, a knockout might be one way to do that. It is rather interesting that the one Fibonacci level that we see on here, which is this where I am right now, it's just below 1740. Is a retracement level. So that might be where on the upside. That's actually what it's done in the past. It's gone from 1700 up to this level, and it came right back down to the same price. Don't know if it's going to do it again. A little range that you might want to take a look at, but clearly gold out of favor, but there might be opportunities to catch a bounce here and there. All right, Brian, I want to go. Let's. We talked about oil. Oil's off its highs. There's a lot of oil numbers coming up this week. We've got crude oil inventory today. Let's take a quick peek over at oil.
Sure. So, oil's been, again, we talked about oil yesterday. We talked about a large and emotional move up. This 62 level has been a level that we've been watching out for after. Again, this was a profit target from before. If you guys remember this, we had one profit target here, another profit target sitting at this 59.64 level, and we took a bounce off of it and said, okay, we'll remove it. We'll call it now since we've established the new bottom and what we need to watch out for. Yesterday, we were sitting right here. And again, we were talking about this. I remember drawing it, how we had, again, these buyers stepping in and they kept having lower highs and lower highs and lower highs. Well, it literally reached right after that, about 2 hours afterwards. In one candle, it retraced back to the origin of the move, that 59.69. So anybody able to get short from that one from yesterday's discussion, again, just slam right through the bottom. Now, it did establish a new base here. And again, I always like to leave these on so you guys are able to see it. We had testing here. We had testing here. It hit it again in number 3, and it is where it broke. But look what it did here on the other side. It back up again. Again, used it now as a box. So just like we had here, we also had here, which just also happened aside with the European Open. So interestingly enough, the European Open was what really kind of sent this thing through the roof. It drove us up about $1.40, which is, again, what the oil inventory report typically would make us move, and then literally turn on a dime right here in that 60. So it's kind of pushing back down. This is a lot of movement. We had $1.40 up, and then what? About 80 cents to the downside from there. So that's a lot of volatility in a very short period of time. And again, a lot of this probably has to do with the rushing and forth. So the big question today is there still enough juice left in this one with an oil inventory report, because we've had so much movement thus far? Now, I will say this is not necessarily the 60.92. It's not necessarily a level that I'm in love with, because again, it has chopped through multiple times. It did turn here, and it was a level that we had worried about in the past. I would say right now, with it really kind of rolling, even 30 plus minutes before the open, I think that 62.73 is a safer level. I wouldn't be surprised if we come up here, or if we start getting basing here, we can turn. The important thing to do with this one, if you want to trade this news-wise, is kind of see where we're floating. At 9:30, when the U.S. market opens, there will probably be some type of reaction to that, the employment number. Less employment, less people just demand. The services number could completely reverse that at 10 o'clock. So because it's kind of bang, bang, bang right in a row, we need to do these 30-minute levels and see. I personally think the cleanest are the 59.69 and 61.70. In the middle here, and again, this is kind of repurposed Fibonacci tool into using it for the curve, where we're bullish minded, or I'm sorry, bearish minded, bullish middle. We're kind of a little iffy on it. I will leave you with one warning as far as oil. And again, if I'm going to use an intraday curve, I'm going to be thinking about kind of this range, but maybe even a bit higher. Okay. The whole Russia situation is a geopolitical event. It's not something that you can prepare for. If Putin puts some type of a tweet out there about cutting production or doing this or increasing production because he's angry, those are things that there's no way to prepare for. So you need to prepare for that one. And again, that's one of those uncertainties in trading. I mean, that's just what it is. So, we still have the 62.65 up top. The 61.73 is also a level where we've seen sellers really step in hard. And again, we found buyers down here, down in this 59.70 range to the downside. So look to see where we are right before news. And then I would say that's probably the best way to take this one. But this is, again, a lot of movement, very, very fast. This has happened to us now 6 or 7 weeks in a row, where the European session has been the mover for oil.
Yep. So here, you know what, and just some thoughts here as we look at it on the Nadex charts, and I've got the levels Brian dropped in there roughly on this chart. One way to think about oil, again, we can see that it's in the last few days, there's been some selling pressure. It's come off of its highs. Part of that was news out of people thinking at this level, OPEC's going to say they're going to start producing some more and taking advantage of these higher prices. But again, we don't know what they're going to say. That's tomorrow. And you always take what they say with a grain of salt. You toss that in with what's going on with Russia, and it has the ability to move oil around. One way, if you see it making a big move, I mean, and you could see it clearly did this in the European session. I mean, oil rallied. Binary options. These are there's different levels of strikes. If you start seeing it make a move and you want to try to take advantage of that, one way to do that in a limited risk, limited reward way so that you don't get harmed if some surprise were to come out there, would be to play oil in the binary options market. All right, with that, let's do one last quick, and I think it kind of brings it together. Gold we talked about when we and the proxy for gold is the is Australia dollar, and then we talked about the so gold's getting hit, so that harms the Australian dollar. You got the U.S. dollar seeing strength, which we mentioned earlier, and so that really kind of amplifies it. I thought it might be kind of interesting to take a look at the Aussie U.S. dollar, and just see what's going on there, because you got the 1-2.
Yeah, I mean, here's the Aussie chart. Aussie chart from yesterday. I know sometimes it's hard for people to see, but this is where we were yesterday. Actually, right there. And we talked about we had a level here, 78.30. And remember, this is what we're looking for. We're looking for big pushes, right? We had a level of base and we had a big drop. Now, right now, again, you may or may not be in this trade already. It was one that we set up yesterday, and it had a decent push to the downside, about 40 pips already. It has, looking at the chart, you can see, and I'll bring it down to a 30 just to see a little easier. Let me remove the blue line. This level, I forgot you guys see my cursor. This area right here is an area that I'm interested in. The reason why, besides this little hiccup, and this little hiccup here was about 4 pips. It's very, very tiny. Actually, I have a setting to get rid of that. But anyway, this is a big racetrack up. I like this level here. I think this is a decent level that we can continue to burst through. If you're already not, if you're not already short from this one from yesterday, there is a way to look at this and say, hey, listen, there's a level of basing, right? Since we are stabilizing, could this be the risk level? Now, the established level of risk to take this one short. When you put your risk, you guys can see, and again, I'll shrink my little my makeshift cursor. Here's the 1-to-3 risk to ratio. It is in front of the opposing demand zone, which is what also needs to be our profit target. So, it's interesting. It's basing in this level. It's a level that you would expect, some buyers within. But again, one short from yesterday, another one here. And then again, remember, Aussie, here is the Aussie yen position that we talked about. Kind of the same thinking. We're sitting here now. Yesterday, we were sitting right here. Here, I'll bring this over. We were sitting right here yesterday at our presentation at noon. All right. So again, this one ended up triggering last night at about 30 p.m. If you guys remember me talking about great news that you can trade at night, there's 7:30 p.m. And again, we go into yesterday. What did I tell you about 7:30 p.m. GDP releases? That if it was better or worse, we could see some movement. There's the Aussie news. There is your 7:30 reversal last night. All right. So again, same thinking. We are getting a basing level right here. Is this one set up for a short? It definitely potentially could be. We're seeing some basing here if it breaks through the small level of buyers. Again, we have targets on this one that come right back down to the, I'd say approximately 82.77. So just two different Aussie trades. Again, both are with gold. And again, with the news today, that these could both be movers.
Terrific. With that, if you've got any questions for Nadex, please email us, customerservice@nadex.com. We are here to help. Brian is also very accessible. If you'd like to reach out to Brian, you can catch him at support@keeptradingsimple.com. A quick little recap on what to look at today. Remember, 10 a.m. Eastern, ISM services, might see something happen then. But oil is going to be an interesting story for the next 2 days. We got crude oil inventories at 10:30 today, and you've got OPEC Plus meeting tomorrow. So keep an eye on that. Tomorrow we also have the Fed chairman speaking, so Powell can certainly move the markets tomorrow, and then unemployment's on Friday. So it's going to be an interesting couple of days this first week in March. So oil in play, gold in play, some opportunities to take a look at. We will catch you again tomorrow morning. And with that, we want to wish you good luck in the markets. Thanks, everyone.